Welcome to the weekly market view from Capital Spreads. I'm joined by Bill Hubard from markets.com. Welcome again, Bill.
Thank you,
Good to
Angus.
see you. And so far this week, really, we've seen the markets over the last few days slowly but surely drift lower. There's definitely been a shift in sentiment towards the negative. Yet today, for some reason, I mean, we were calling the FTSE to open lower before the open today, yet it's just gone higher and higher, and it's rallying into this afternoon. Kind of, what's your take on that change?
Well, I think the interesting thing is, in reference to what you were talking about, the equity markets. Now, as we saw with Euro-Dollar a month ago, we saw a very strong rally in the Euro-Dollar up towards the 132 level, feeling that Spain was ready to ask, hat in hands, and give you the money. Well, when that didn't happen, we saw the Euro sell off about 3 or 4 points. This is only my feeling, okay, is one, the market felt that Spain probably would not ask for or delay asking for the bailout, feeling that could they get the same response as Greece got? Oh, by the way, Spain, if you ask for a second or third bailout, quote, it's going to be much tougher on you. Well, as we saw yesterday with Angela Merkel saying that it's important they don't leave the Eurozone, as we saw overnight again, the Troika saying that, you know, maybe we'll be a little bit more lenient, maybe we'll give you a little bit more time. Is that philosophy going through Spain? But I think the key was when they got down the bond market, they got downgraded again. And I think it's a question of, is now Spain concerned we can't go any lower? Is there the worry that pension funds, insurance companies that own some of the Spanish bonds may not be able to own them anymore because of their credit reference?
Yeah, so of course you're referring to that downgrade by S&P. So would you say that S&P are slightly behind the curve because of course Moody's were already there, and yet we haven't even seen Fitch move yet. Fitch has sort of still got Spain on a much higher credit rating. So do you think that now S&P have come into Moody's territory, do you think we could potentially see Moody's go that one notch further to junk status?
Well, I guess to answer your question, I am not, have not, and will ever be a fan of the rating agencies, okay? For the simple fact is, this was well before you were born, when a company called International Business Machines, followed by Microsoft, decided maybe they didn't want to get a credit rating, okay? Because you have to pay for it. And the simple fact is, it took the Dow 64 years before the Dow would get a small regional bank called the Morgan Guaranty Trust Company ever on the Dow. So I'm not a big fan of any of these rating agencies, so I don't think, from my standpoint, I think the whole thing is meaningless.
Okay, so, but the point being is that what we're clearly seeing is that the market sentiment has changed to positive. That coincides with S&P's downgrade to their credit rating. So do you feel that Spain are being pushed into, obviously clearly the markets are potentially pushing them towards that bailout. So do you feel that that has now become more of a possibility and closer?
Yes, and I think from the market standpoint, and we have nothing to gauge this from any comments from the Spanish government, but the market's feeling that, right or wrong, the market may be pushing them in to make the decision to go along with the bailout. And then, of course, we have to go back to what Draghi said last week. You know, we have done everything we can as the European Central Bank. It's up to the governments. But we got the positive comment about Greece yesterday from Merkel. Maybe this is a situation we get a positive comment from the Spanish government, okay, and also with the Italian government. But it really is, you know, the data is improving, but it really is the market saying the government seems to be sort of getting in sync when the Eurozone will stay, Greece will stay in, and we will get the bailout request from the Spanish government.
Okay, so we've been very much focused on the Eurozone. We tend to do that a lot, but going over to the other side of the pond, initial jobless claims. Big drop there.
Yes.
A real surprise actually, and probably almost certainly assisting with the rally today, but that kind of complements the latest big fall in unemployment. Almost feels like sort of someone's cooking the books a bit ahead of the election.
One of the things, Angus, I don't know whether we've talked about it, but I've talked to one or two of the other talking heads. I'm having a very difficult time with, quote, the data as we know it, okay? The simple fact is, so many of these statistics were set up in the 30s and 40s, hence it's U.S. non-farm payrolls. And even Sir Mervyn has said this on several occasions in the past 3/4 months. Why are we seeing a dramatic, double dip technical recession when employment is actually improving. And I think one of the things that we have to look at is whether you talk about temps, whether you talk about people starting their own businesses from home, etc., where there is no job. So we'll start off of, ABC or a Starbucks coffee or something like from home, and that's where we're going. So I think what we're seeing is a massive change. People would rather work temp for 3 or 4 weeks, 3 or 4 months, knowing that there's not a permanent job out there. So I think what we're seeing now is the statistics are not lying, but I do think we're looking at like the household survey number, the unemployment, as you see, the jobless claim number. This was a 4-year low. I mean, we haven't seen these numbers since the employment picture in the States was below 7%. Okay, so I think what we're seeing is a seismic shift in the concept of what we consider to be employment.
Interesting. So one shouldn't read too much.
I'm not. Okay, I think we are seeing, the evolution of nothing being wrong with being a temp.
Okay, and so we've seen this rally and maybe a lays in for equity markets. Do you feel that maybe we could push a bit higher?
No, I don't think so. I think if you look at it, with the euro, it's a technical position. I mean, the S&P Classic 1421 again is another technical position. If we get about 1444.5 and 1450, then we could be selling it here. We got close to. Ticked, I think, once at $1,800 on gold. Another technical position. So I think right now the market is at least being supportive from a technical position. Also, the fact is we got fantastic earnings out of Burberry. I think Burberry was up like 10% today. I know it's only one stock, but it's a situation where, if nothing else, maybe the people that have been selling Burberry down.
Well, maybe there was a bit of a bear squeeze on Burberry.
I think it probably is, and I think it may be a slight bear squeeze. But as we both know, where is the volume? And I think this is a classic technical move, getting maybe to the weekend. I don't expect anything out of G10, mainly because China's not even showing up. But I think what we're seeing right now is on very low volume, probably a slight technical move, and the old wish, hope, praise.
Maybe a best. It's okay. Well, thanks so much, Bill, as ever, and very interesting to talk to you. That's it for this week.